Business alert. The picture's still really ugly for the Nasdaq. We should punch up a chart right now. It is down 5 weeks in a row, on track for its longest losing streak. You got to go all the way back to May of 2022. It's down 435 points today, 1.9%. We got major news out of the housing sector. Existing home sales plunged 8.4% in January to the lowest level since September of 2024. That drop is more than double the month-over-month estimate of 3.9% decline. This comes just 3 days after the House of Representatives advanced a package of bills designed to improve housing affordability, in part by giving builders and local governments incentives to ramp up construction. The inventory is so thin. So joining me now to dig into how we get that thicker and, of course, prices and where the housing market is headed is the newly minted president of Compass Real Estate, Neda Nevab. Neda, good to see you on some pretty ugly numbers. That's a 16-month low those numbers came in at.
You know, we saw 4 straight months prior to this month's existing home sale report of really good news and of gains. And I'll tell you, Liz, what I'm looking at are 2 indicators that give me a lot of optimism. The first is weekly mortgage applications. They are up 4%. That speaks to the buyer demand, buyers leaning in. And then the second thing I would look at is weekly pending home sales. Those are up 3.5%. So that buyer demand is translating into transactions.
Mortgage rates were certainly a huge part of what was freezing the markets, because people who were in homes that maybe they wanted to sell or move to something bigger were kind of held by golden handcuffs because they had very low mortgage rates, 3% from several years ago. But then they went as high as plus 7%. Look at how far they've come down. Today, the average 30-year fixed, Freddie Mac, of course, 6.09%. It's probably a little higher if you look at bank rate. From a year ago, it was 6.87%. So that's a good part of the picture. And I would imagine, Neda, that home builders are up today, and they've been up on down days lately because Congress is trying to clear out the red tape to build more housing. But where do we stand? That's new housing. How do we get existing housing inventories higher?
It's a really important point. Inventory is the key. It's what I hear as I travel around the country talking to agents. So I see some good news. We've had 25 straight months consecutively of inventory growing and increasing. Inventory right now, the Compass data shows, is up 10% year on year. And look, it's a very market-specific dynamic, right? It's not at the levels that we need it to be everywhere. You know, I was traveling across Connecticut and Westchester this week. Those suburbs, those upper middle-class suburbs, are very tight on inventory. But that's not the case everywhere. I think we are seeing, as that inventory gets unlocked, as homeowners who are also buyers, they're not only sellers, get used to that 6% mortgage rate, they're willing to list. They're leaning into the market. And we're starting to see that. I think 2026 is going to be a story of a more balanced real estate market between buyers and sellers.
One of the constrained states was obviously Florida, Texas as well. People moved there in droves over the past 3 years. Where are those areas that you're talking about that are less constrained?
Yeah, well, Florida, as you mentioned, by the way, is a really interesting one because we're starting to see a lot of momentum in Florida. Sales are up 8% year on year.
Why, are people leaving Florida?
There's just more movement. I think their buyers are leaning in and sellers are leaning in. Texas is the opposite. I think Texas is struggling a little bit. It doesn't see that same post-pandemic momentum that it did. I think in Florida, we're seeing a lot of momentum, and it's a hotter housing market. I also think the luxury sectors tell a bit of that story. So South Florida is benefiting from the wealth accumulation.
Let's not ignore the rest of the country. I was just on vacation in Idaho last week. Oh, what a gorgeous, gorgeous state. Boise, there's some very vibrant areas, Ketchum. So tell me what you see in states like that. Where are those areas that might be the up and coming states and cities?
You know, it's interesting. I would say Boise as an example, Vegas as another example. These places that had a post-pandemic boom, things are a little bit quieter now. I think there's probably an opportunity in those markets for buyers. Prices aren't as hot as they were in the post-pandemic years there.
Let's go back to Florida. People still are rushing there for, in many cases, tax reasons and the weather. Let's not kid ourselves. The weather is gorgeous for most of the year. Summer's a little bad for the hair. But Wall Street Journal reports that Meta CEO Mark Zuckerberg and his wife Priscilla Chan are going to buy a mansion in South Florida, along with a lot of other famous people. Tom Brady, Gisele Bündchen, they all moved out there. Of course, the Trumps live there as well. But Jeff Bezos has 3 homes on Florida's billionaire bunker. Google's co-founder Larry Page bought several properties in the last few months in Coconut Grove. There is that talk of the Mamdani effect of New Yorkers decamping to the Sunshine State. Obviously, Zuckerberg is a Californian, but there are issues there too. How much of that do you get when you pick up the phone at Compass?
Look, I'll tell you, I think that the sense that I get from agents on the ground is that people are quite mobile, but it's not the same that it was in those post-pandemic years. I think people are being more thoughtful about where they want to live, but I don't think you're seeing that flight to those low tax states in the way that we did with such acceleration right after the pandemic.
Neda, it's so interesting to watch every tick of this, because right as the pandemic began, the rent issue, people were leaving their apartments, buying places out in the country. Rents are so incredibly high. What is that doing for your business?
It's such an interesting point, and looking at rent is a really key part of how we think about the broader picture. I'll tell you, it's really a story of supply and demand. If you zoom out to San Francisco, rents are up over 6% year on year. And if you actually look at the neighborhoods within San Francisco that are right outside of the AI corporate headquarters, Mission Bay, San Francisco is an example where OpenAI is headquartered, their rents are up over 13% year on year. And then you look at a market like Austin that was built up in the post-pandemic boom, and it's seeing rents down about the same level, about 6% year on year. So it's such a story of supply and demand today.
Well, we have to tell our friend Stuart Varney, because he always does the California screaming, everybody hates California, San Francisco's going down the tubes. Apparently not, which we knew. We knew that wouldn't happen. Good to see you, Neda. Thank you very much.